This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, July 25th, 2016. Euro dollar. So the trajectory of the euro continues to favor the downside, and the market is now approaching critical support at 109.12, which guards against more significant medium-term support at 108.23 further down. At this point, any rally should be very well capped, with only a break back above 111.87 to compromise the bearish outlook. Sterling dollar. So cable has been locked in a consolidation since basing out by fresh plus 30-year lows the other week, just under 128. At this point, the market is classified as bearish consolidation, with any rallies viewed as corrective, eventually ahead of the next downside extension below those recent 128 area lows and towards psychological barriers at 125 further down. It's really going to take a break back above 138 to take the immediate pressure off the downside. Dollar yen. So dollar yen looks like it wants to carve out a lower top at 107.49 after topping out by that level last week, and there could be a fresh downside extension now that takes us back down towards those recent 2016 and multi-month lows at 98.99. Only a close back above 107.49 would compromise or delay this outlook. Euro Swiss. So Euro Swiss has been chopping around in recent trade, but while it holds above some key support at 107.78, the risk is for continued bounces off the range base in favor of additional upside. However, if we do see a close below 107.78, this will compromise the structure and potentially open the door for a retest of the 2016 lows at 106.23 and below. Aussie dollar. So Aussie has recently stalled out at 76.77, and it looks like the market could be wanting to put in a lower top ahead of the next major downside extension towards next key medium-term support at 71.45. At this point, only back above 76.77 would compromise that bearish outlook. Dollar CAD. So dollar CAD looks to be approaching some critical resistance or looking to establish above some critical resistance at 131.89. A break above this level will signal a bullish breakout, confirming a base that's in place by those 2016 lows at 24.61 and opening the door for a next major upside extension towards the 135 to 140 area. Kiwi dollar. So Kiwi has broken down sharply in recent trades since putting in a 2016 high at 73.25, and there is risk for deeper setbacks over the coming sessions, with the market seen back towards next key medium-term support at 66.75. At this point, look for any rallies to be well capped ahead of 72. SPX 500. So the S&P 500 continues to put in record highs, with the market recently trading to a record high of 2177, which opens the door for fresh upside towards next key psychological barriers at 2200. However, on a medium to longer term basis, the market is looking stretched, and on a shorter term basis, we're starting to see stretch signs as well, which could open the door for the next major reversal. At this point, though, we need to see a close back below 2150 to take the immediate pressure off the top side. Gold. So gold has seen some setbacks in recent trade, although the market should be very well supported into dips towards 1300, with a higher low sought out ahead of the next major upside extension. Really only back below 1300 would compromise the highly constructive outlook, but only delay that outlook. Below 1250 would really be quite required to negate the bullish outlook, because we've been seeing the formation of a major base over the past several months, which does suggest that we'll see a move up towards and beyond 1400.